Good morning, everyone, and welcome to Genex Power's Q3 FY23 Investor Webinar. My name is Saskia. I'm part of the Investor Relations team and I will be hosting this call. With me today is Genex CEO James Harding and CFO Craig Francis. At this time, all participants are in listen-only mode. A Q&A session will follow after the presentation. If you wish to ask a question, please type your question into the Q&A box and I will read it out. This call is being recorded. I will now turn the conference over to James.
Yes, good morning, everybody, and thank you for joining us for our quarterly update. Very pleased to be here with you. We've got a slightly different format of presentation that some of you might notice today. Hope you'll like it and find it clear. So we're going to step through some slides, starting with just a snapshot on the group and obviously our results for the quarter. We'll talk about our committed portfolio, and provide an update on the development portfolio of exciting projects that we have in front of us, and provide a few words on the industry backdrop and why that underpins our strategy. And then, of course, at the end, we'll have some Q&A. So next slide, thank you. So just a sort of an introductory slide to Genex. We are a company focused on developing a portfolio of renewable and storage projects in Australia. We're across multiple technologies, including large-scale batteries, obviously pumped storage, hydro, wind and solar, and we're active in Queensland and New South Wales. We've got a $1 billion portfolio, which offers 100 megawatts in operation, the 2 solar farms, 300 megawatts under construction, 2 large storage projects, a pipeline of well over 2 gigawatts. We've generated 785 gigawatt hours of renewable energy and about 650,000 tons of carbon dioxide has been saved. Our purpose is to play a leading role in Australia's transition to a clean energy future by focusing on innovative renewable energy generation and storage projects. So our portfolio, this map will be familiar to some of you. The bulk of our projects and our pipeline is in Queensland. In the far north there, the Kidston Clean Energy Hub obviously represents our flagship project, the Kidston Pumped Hydro Project. 250 megawatts, 8 hours of storage, the operating Kidston Stage 1 solar farm, 50 megawatts, and our next pipeline project, the Kidston Stage 3 wind project, 258 megawatts, and the opportunity for further solar expansion at that site. The Baldercombe Battery in central Queensland, very strategic location. That's our first battery project, 50 megawatt, 2 hours, under construction. The Gemelong Solar Project in New South Wales is in operation, 50 megawatts, operating merchant. And last but not least, the Bully Creek multiple stage battery and solar project, right on the border between Queensland and New South Wales on the interconnect, a very strong part of the network, and that's up to 2 gigawatts of combined solar and battery. I'll hand over to Craig just to talk through some of the results.
Thanks, James, and good morning, everybody. So just running through the operational and financial results for the quarter, which principally related to the operational 50 megawatt Kidston Solar Farm and the 50 megawatt Gemelong Solar Farm. So Q3, there was total $8 a megawatt hour, and Gemelong, which I'll remind you is a 100% merchant, generated $3.6 million from sale of green certificates and from the wholesale energy market. That represented an average price of $107 a megawatt hour, which has been pretty consistent since we've seen the market stabilise early in this financial year, following the peaks in June last year. Year-to-date revenues of $19.4 million on the back of this quarter, which is consistent with past performance. And look, pleasingly, another quarter of a positive operating cash flow of $0.7 million. That takes it to $4 million for the financial year to date, with another quarter to go. And we're actually marking the 12-month anniversary of the business being operating cash flow positive. So really good trajectory we're seeing, and and I'm hoping it will continue, particularly as we bring Bouldercombe online later in this calendar year. The cash position at 31 March was $64.1 million, and another pleasing quarter on the health and safety front, with 0 lost time injuries and 0 environmental accidents. Just running through then on the committed portfolio, I'll just give a snapshot of the financials, which we've seen before handing back to James. But just to remind, what we have in front of us is a really exciting profile of largely contracted revenues, really ramping up over the next couple of years. As you can see, we've got our actuals in blue there on the left of the chart, which shows in FY22 the first full year contribution from Gemelong. We're expecting similar levels in FY23, and then the contribution of Bouldercombe from FY24, which we'll start to see revenues ramp up again. But the exciting thing for us, as I think all shareholders are aware, is we're nearing the end of the construction of the hydro project, which will see a significant ramp up in revenues from FY25. That FY25 chart shows about 6 months worth of contribution from the hydro and a full year contribution in FY26. And you'll see that we can look forward to a very long-term, stable and growing revenue profile as these revenues are indexed to CPI, and that's expected to drive the future growth. This sort of represents what we see as annual average revenues of $95.6 million out to 2055. 83% of that is contracted, which we're really lucky to be in a position to have that level of contracted revenue, because it does allow us to take merchant exposure in the portfolio very selectively, where we see significant upside that could be captured by certain projects. EBITDA margins across this portfolio are very consistent, above 70%, and we see that for all assets in all the different types of technologies. And once these projects are built, there's very little capex required to keep them going. So it's really upfront, and then look forward to the cash rolling into the service debt and return to equity. I'll just hand back to James now to run through the rest of the committed portfolio.
Yeah, thanks, Craig. So a lot of you will be familiar with the Kidston Pumped Hydro project. That's our flagship project. We say it's changing the game, certainly for Genex as a company, but also for the energy market. As we know, a large number of these very large storage projects are going to be required over the next couple of decades in order to underpin the change to renewables. So this is the first pumped hydro project, first large-scale storage, deep storage project in Australia for 40 years, 250 megawatts for 8 hours of storage. It's got a very strong up to 30-year offtake arrangement with Energy Australia, as Craig has just mentioned, which has allowed us to secure over 80% leverage for the project with a $610 million loan from the NAIF long-term and a low fixed interest rate. Unsurprisingly, the project has enjoyed a lot of support from both state and federal governments. It creates a lot of jobs up in the north of Queensland, in a remote part of the country, 900 direct jobs from the hydro project and the transmission line. And it helps to unlock the renewable generation potential in North Queensland, obviously at Kidston, the clean energy hub itself, and up towards Cairns and beyond. We've got a fixed price lump sum EPC contract in place for the hydro project with 2 top quality tier 1 contractors, McConnell Dowell and John Holland, and construction is on track for energisation at the end of next calendar year. Just having a look at the picture there, you can see the 2 in the foreground, the 2 pits, the upper and lower reservoir. On the left-hand side is the Eldridge pit, which will be the lower reservoir. And in the middle of the picture, the Wises pit, the upper reservoir. And very clearly you can see the outline of that elevated dam that's being constructed around that upper reservoir, which will contain the water when the project is complete. On the next slide, you can see a schematic of what that will look like once the dewatering of the lower reservoir is complete. So the picture in the middle shows in light blue there, that's what the filled area within the dam walls will look like in the upper reservoir, the Wises reservoir. And the Eldridge pit, so on the top of the picture, shows the sort of the dewatered results once the dewatering activities have been complete. Just at the top of the upper reservoir, you can see the water intake canal there. That's where the 2 vertical water intake shafts will drop 230 meters to the powerhouse cavern. So over in the schematic on the right, you can see those 2 dark blue vertical shafts going into the pink underground powerhouse cavern. There's 2 other vertical shafts. One that's just been completed. That's the red is the ventilation shaft. That's just been the excavation that's been completed, and the cable shaft is in light blue. And you can see the access tunnel there. That's the white tunnel heading down from the surface. The realigned access tunnel is in yellow, following the water ingress event that occurred in September last year. Together with the EPC contractors, we determined that it would be prudent to realign the rest of the access tunnel away from the water feature, and that's what we've done. Progress is good. We're well into the powerhouse cavern construction, and we're, as I say, we've completed one of the 4 vertical shafts, and looking to complete all the underground works by the end of this calendar year. So just showing where we are in the project program. We're about halfway through construction. You can see the red line along the bottom. We've commenced the powerhouse cavern excavation about a month or so ago, and we're well into that now. The equipment from Andritz, the turbine and generator and other key equipment is close to completing manufacture and will be shipped this year, and all that key equipment will be on site by the end of this calendar year. So we're on track for getting the underground works complete, all the equipment on site and ready for installation at the beginning of next year, and to commission and energize the project from the end of next calendar year. Just the photos along the top, you can see on the left-hand side that that dam wall on the upper reservoir, and in the Eldridge pit at the top of the picture, you can just see the water dewatering activity. So there is a floating platform in the middle of the reservoir with 6 very large pumps and 6 pipelines that are taking the water from that reservoir into the upper reservoir to bring the water level down. The middle of the picture just shows a close-up of the dam wall with the screed layer on top of which the HDPE final lining will be laid, and that activity has kicked off already. And on the right, you can see some Andritz equipment being delivered to site. Our other exciting large-scale storage project is, of course, the Baldercombe battery. That's the first in our strategy of large-scale battery projects that we intend to roll out in central Queensland, right inside the fence of Powerlink's Baldercombe substation. You can see a picture there of the megapacks already arrived on site, installed on their pads, and in the process of being connected up. So all the works are ready, and we're working with Powerlink to achieve energization by the end of June this year. And the start of the commissioning and hold point process will continue into full operation later this year, ahead of the summertime. So a very timely moment for that battery to come on. We've got fixed price supply and works contracts with both Tesla and CPP, the BOP contractor, and a very interesting, innovative revenue structure with Tesla. They'll operate the battery for us. And for a period of 8 years, we have a fixed floor of revenue guaranteed by Tesla, which helps us to get some debt into the project. But essentially, it will be operated as a merchant battery, utilizing the energy and FCAS revenues. And we have a revenue sharing mechanism in place between Genex and Tesla for that. I'll hand over to Craig to talk a bit about our exciting development portfolio.
Thanks, James. So the first project we want to talk about today is the next cab off the rank, if you will, in our portfolio growth, the Kidston Stage 3 wind project. This is a project we're developing jointly with J-Power. So Genex owns 50%, J-Power owns 50%, and they're contributing funding toward the development cost of the project as part of that arrangement. And it will be the third technology to be installed at Kidston, completing the Kidston Clean Energy Hub of wind, solar and pump storage hydro, using the transmission infrastructure that is being funded and constructed as part of the hydro project to fill the balance of the spare capacity of that line. We've been monitoring the wind resource up there since 2018, and we've now concluded a technically feasible wind resource, and you'll see the profile to the right, which shows a very favourable resource, which is essentially correlated away from solar, so that if you have a put a solar profile over the top, you've got a largely firm base load profile, which is very attractive for the offtake markets, really capturing those morning and evening peak pricing. And similarly on a seasonal basis, most of the generation is over the wet season when you see less solar due to the lower irradiance, and that's also viewed to be favourable. So at the moment we are working to sort of take this profile to off-takers, and we're in the middle of those discussions, and we're hoping to have some news on that in coming months. The project has been we announced in December. We've upsized the project to 258 megawatts, owing to the resource availability, land availability, and transmission availability. And we're now sort of right in the thick of it in terms of progressing the development work streams, development approvals, working with Goldwind as the preferred turbine supplier and installer, balance of plant contractors, and then about to kick off the project financing work streams in the second half of this year. This will be targeting a final investment decision by the end of this year, and that will be operation in early 2026. So a very exciting project that we're looking to bring more more news about over the coming months as we continue to de-risk it and move it towards final investment decision. The next project in the pipeline is the project we acquired in August last year, the up to 2 gigawatt Bully Creek project, which is a solar and battery energy storage system project. It has all approvals obtained and located in a very strong part of the network where there's ample grid capacity and very close to the Bully Creek substation, which is where the Queensland New South Wales Interconnector connects. It's also got a very attractive MLF, being close to the load centres of Brisbane and Toowoomba in southeast Queensland. At the moment, we've been pretty busy with engaging with off-takers to essentially deliver a PPA-led development strategy. And we're planning to bring more news on the sort of project staging plan once we've got some of those locked away, which we're expecting over the coming months. So lots of exciting stuff happening in the background, and we're looking forward to updating shareholders over the coming months when some of those milestones are delivered. At the moment, we're looking at sort of 400 megawatt battery and up to 1.6 gigawatts of solar, but more news to come on this over the next quarter or two. I'll just hand back to James to talk about the industry backdrop that we're seeing and the outlook for the business.
Yeah, thanks, Craig. And look, this is really why we're so excited about the future prospects. This slide and this chart is probably going to be familiar to some, although we've updated it this time with the most current projections. And what it shows is the black line is the coal capacity in the market, coal-fired power generation capacity, and how it is declining over time as coal-fired power plants close, as they reach the end of their life. And that line is now considerably steeper than our previous projections. And we see, whereas I think the last presentation we made that showed the coal exiting around 2055, you can see that it's pretty much out of the system by the early 2040s, according to current sort of consultant reference case projections. And there's been even a report that was commissioned by the Clean Energy Investor Group a week or two ago. It was announced that in order to meet the 1.5 degrees Paris commitments, we need to see a considerably steeper line than that. So very clearly, that coal-fired capacity is coming out ever more quickly. It's going to be replaced by wind and solar, which is the low-cost and renewable energy resource. And we see a significant upsurge in the electricity demand over time as electrification for vehicles and for essentially green manufacturing of all types. So renewable energy expected to increase to 87% of the NEM by 2045, and that needs to be balanced by storage. So wind and solar obviously is a resource that is intermittent and therefore needs to be stabilized by different stages of storage. And on the next slide, we can sort of see what the impact of that is. Last year, we saw very high coal and gas prices, which results in high marginal pricing in the morning and evening peaks in particular. We saw availability issues with breakdowns at coal-fired power plants. owners are increasingly reluctant to spend on maintenance as the life of their power plants comes to an end. And we've seen some extreme weather events as well, which have all contributed to price volatility. So the price shape during the day has been dramatically exacerbated over the last 12 months. And the chart on the right just shows Queensland year on year from 2021 to last year. The blue is 21, the green is 22. You can see that the average spread price during the day in the first half of each year has increased by more than double basically over that period. So that just adds to the business case for storage. And our growth strategy as a company, we've now got a very secure, fully funded base of 400 megawatts of solar and storage projects. 100 megawatts of that is in operation. The rest are the two large-scale storage projects we just talked about in construction. We've developed a very sound network of relationships and skills and knowledge of the market and the financing of these projects. And we want to leverage those relationships and that knowledge to ramp up the expansion of our portfolio. And as we've just described, we've got a very exciting, very large, well over 2 gigawatt portfolio of near-term pipeline opportunities across wind, solar, and large-scale battery. And indeed, the pumped hydro project at Kidston, which we're looking to complete construction in the next 18 months to 2 years, we have already, and we will have huge learnings from that project, which we intend to make available to other opportunities in future. Just a slide on the Queensland Government Renewable Energy and Jobs Plan. It's a pretty ambitious plan that the government announced late last year. They're targeting 80% renewables by 2035, up from, I think, just under 20% today. So it's a pretty steep ramp up. We are playing our part as a company. As I mentioned, most of our existing and pipeline opportunities are in Queensland. We see it as an extremely promising state from an electricity market, from a market pricing, from a network and connection perspective. And that's where we focused a lot of our efforts, and that's where we've developed a lot of our knowledge and contacts. So I mentioned 900 jobs being created at the Kidston Hydro project alone. We're helping to boost the rural economics in North Queensland. We got over 2 gigawatts of pipeline in the state, and we've developed very strong relationships with the government-owned companies, Powerlink, the network service provider, and the big gentailers in Queensland. And we're looking to leverage those relationships for our future benefit. And finally, a slide on basically our ESG credentials. We're very committed to ESG and to sound management, to managing risk and driving safety leadership through the organization. We focus very strongly on diversity and in particular Indigenous engagement in our workforce up at Kidston and elsewhere. We take great care of the environment. Obviously, we're turning an old mine into a productive renewable generation facility. We're abating huge amounts of CO2 as we do it, and we're absolutely committed to conserving the environments that we operate in. And as far as the community is concerned, we do operate in remote communities. We take great care to work closely with the communities to employ as many as we can locally. And in particular, our relationship with the Yuamin in North Queensland is extremely strong, and we're a sponsor of their Tallaroo Hot Springs Indigenous enterprise just to the north of Kidston, and with our Kidston Wind project, we're looking to expand that relationship. So very, very proud of our strong engagement with the Yuamin. So finally, just I guess a highlight, a summary slide. We offer a diverse renewable energy and storage portfolio, the only ASX listed company that is a pure play renewable energy and storage, absolutely committed to strong ESG credentials. We've got by now a proven track record of delivering projects on budget and on time with our 2 solar farms and the 2 big storage projects on the way. We're leveraging our strong relationships with tier 1 stakeholders. As Craig mentioned, we're fortunate to have a high degree of certainty and long-term energy contracts providing certain revenue, which also allows us to have some exposure to upside from merchant pricing. For example, the Gemelong solar farm currently uncontracted, and of course the Bouldercombe battery, which we're very excited about. So $1 billion portfolio, it's fully funded to 400 megawatts and growing as we speak. and we see significant upside from future wind, solar, and storage opportunities. So that wraps it up. Thank you very much, and happy to take some questions.
Thanks, James and Craig. We've now entered the Q&A session. As I mentioned earlier, please type your question into the Q&A box at the bottom of the screen and I will then read it out. Our first question is from Howard Patrick. Where can shareholders obtain the details of the 610 million NAIF loan?
You want to take that, Craig?
Yeah, sure. So I think during the development of the arrangements with NAIF, we made several announcements sort of from, I think, 2018-19 through to financial close of the Kitson Hydro project when we finally signed the loan documentation. We released certain details at that time, being the total loan amount of $610 million. I think we notified that it was a concessional interest rate, but we haven't disclosed the details of that rate, which is commercial in confidence. And also that it was a 15-year loan, so it matures 15 years from the date that we reach financial close. We've also disclosed in our quarterly sort of the amounts of funding that have been drawn to date, which it's a $610 million loan. We've drawn $384 million of that, so there is an outstanding balance to go. But otherwise, yeah, I think that the rest of the finer details are probably commercial in confidence, and we haven't disclosed those publicly. But certainly, there's plenty of information out there on our website and in our various ASX now.
Thank you, Craig. Our next question is from Jeremy Lamberton, and we've had a few questions regarding this. Shareholders have received advice that the water ingress event caused Genex to exceed the K2H budget by 10 to 15 million AUD. What was the estimated total cost of the water ingress event, including contingency?
Yeah, I can do that one as well. So we haven't released details of the total cost, and the cost impact is made up of a few things. There's some downtime while the tunnel was dewatered. There was some direct costs owing to the mobilisation of a drilling rig underground and an exploration program to determine firstly the extent of the feature that we had encountered, and then secondly to plan for realigning the tunnel around it to ensure that where the tunnel was being moved to was well out of the way. And then finally, there's obviously some longer tunnels, which is the bulk of the cost. The rerouted MAT and new construction out at 5 and a slightly longer construction out at 1 all had some additional length to the total sort of tunneling length, and therefore resulted in additional cost. We haven't given sort of detailed guidance of that because it is sort of moving around a little bit, and it is a little bit commercial in confidence with the contractor because they are our estimates at the moment. But we were comfortable with that guidance we gave of exceeding the total budget by $10 to $15 million. We still retain project contingency in the total budget. I guess we consider it prudent that over the sort of medium term, going to the last year or so of the construction contract, we look to replenish that contingency, but we are not looking to shareholders to fund that. We have strategies in place at the moment that we're prosecuting, which we'll see that happen without us going to shareholders. So looking more towards the development portfolio and releasing some cash from that to just be on standby, really, to deal with any further issues as they might arise. But otherwise, largely we're comfortable with the numbers we've put out in the market. There's been no change, and we don't see any reason to change those estimates going forward.
Thank you, Craig. Our next question is from Pete Hartman. What would be the effect on the pumped hydro project post completion of a rain event similar to that which hit northern Queensland recently?
Yeah, I'll take that. So obviously it has been a particular rainy season up in North Queensland. It always is during the summer months, but particularly this year was certainly more than average. And there was explanation that La Nina was an effect there. So what we have in place against sort of high rainfall events is a permit that we negotiated with Queensland Government through the Office of the Coordinator General and the Department of Environment, which in certain special occasions, particularly high rainfall events, we are able to evacuate water from the upper reservoir off-site. So that's in place for those sort of extreme rainfall events. but ultimately, we are keen to ensure that we have water security, sufficient water in the system, and the two very large pits have a very big capacity for additional water. So before that's triggered, there's quite a bit of freeboard in the upper reservoir, which can accommodate additional rainfall.
Thank you, James. Our next question is, a lot of time and effort was spent in the data room over the last year. Is Genex soliciting takeover offers?
There was a particular approach in the second half of last year for a potential transaction, which was obviously publicly recorded, and there are a number of announcements to that effect. So very clearly, that was a period of intense activity, and a lot of due diligence was going forward. So we are not actively soliciting any approaches currently. We're getting on with the job. We're very happy with our shareholders that we have, and very much appreciate the support that they've provided us. And we're, as I say, just getting on with business, at top speed.
Thanks, James. Our next question is, how soon after energisation of the Boulder Cone battery will income to Genex be provided?
So it's obviously different from a solar farm where every megawatt hour that's generated is sold at a spot price. But it's still the case that as soon as energisation occurs, there will be revenue accruing to Genex. And it's difficult to predict because obviously there will be charging and discharging. So there will be payments for charging and higher payments for discharging, and it's difficult to predict what that will look like. But over the period of commissioning, hold point testing, up until final commercial operation, there will be early revenues accruing to Genex before the full commercial operation commences later this year.
Thanks, James. Our next questions are from Cyprus. Sia, are you an exclusive partner for Tesla on deploying megapacks in Australia? And his second question is, what is your estimated life of project for your solar farm projects before the panels need to be changed?
So we're not an exclusive partner for Tesla. No, they have a number of clients. We certainly have entered into a very innovative arrangement with them, certainly the first of its kind in Australia. They've done something similar overseas in terms of this auto bidder revenue contracting strategy. But that's it's unique, or it was unique at the time. They may be discussing other opportunities that are similar to this. So no, we have no exclusivity with Tesla. What we do have is an extremely good relationship with them and an appetite to work together in future. As far as solar panels is concerned, all our solar projects are project financed, and the life of the solar project is considered to be up to 30 years. So we would look to a panel replacement strategy towards the end of that period.
Thanks, James. Our next question is, has the K2H powerhouse cavern been drilled out to determine presence of charged water?
So there's a lot of knowledge about what's going on underground. Obviously, a lot of geotechnical work has been done previously, and a lot more work was done following the water ingress event that occurred in September last year. So what we took great efforts to ensure was that we had a drilling program that investigated the extent and direction of that water feature, and that the remaining works were well away from that. So Craig is just showing with his mouse where that water feature was found to lie. We pulled back the main access tunnel into that realigned yellow, safe yellow option, we call it, well away from the water feature. And as you can see, the powerhouse cavern itself is in a location well away from that feature. So we're getting very close to completing the first pass along the roof underneath the crown of the cavern, and the rock conditions have been excellent, as they have in the MAT, the main access tunnel, and the other construction edits.
Thanks, James. Our next question is from Ken Wagner. Will Gemelong remain uncontracted?
So our strategy when we constructed the Gemelong project, and we actually did a combined refinancing of the Kidston Solar 1 project, which was in operation under a very strong 20-year Queensland Government PPA. We were able to combine the refinancing of that Kidston project with the new build finance of Gemelong uncontracted. And the reason for that was we didn't want to be at the mercy of off-takers that could dictate pricing at very low levels pre-construction. And the intent was to come back to the market post-construction when it's de-risked and when we would have more leverage in terms of the price at which we'd strike an off-take contract. And we were in discussions early last year with potential off-take parties. But given the movements in the spot market, as we saw for the reasons that I described, the increase in coal and gas prices and other issues caused merchant prices to increase dramatically. We've seen that the LGC, the green certificate prices, have held up very strongly, very much more so than the models had predicted. So for the time being, we're quite satisfied with having that merchant exposure, but we are constantly monitoring the market, and we will be looking at the right time to enter into a contract should that time arise, and we're monitoring that on an ongoing basis.
Great, thank you, James. Our next question is, how much of the cash as of March 31 is set aside for existing projects under development?
Yeah, great.
Yeah, so I don't think we get down to that level of detail in our disclosures publicly. What we can say is there is obviously money flowing in and out of construction accounts all the time as we draw down loans and make payments. But that's usually a sort of net zero or zero-sum game. We draw down funds to use them each month rather than drawing them down and letting them sit in the accounts. And I guess on the two projects in construction, Kidston Hydro and Bouldercombe, the way they work is we have, we provided equity at financial close, and we drew down on that equity first before we drew down on the debt facilities. That's the requirement of our financing facilities, is the equity goes first. So it's largely a money flowing through accounts, but there aren't huge sums sitting in that cash balance that are reserved for construction.
Thanks, Craig. Our next question is from Bruce McCleary. Are you able to comment on the potential operatorship model of the Kidston Wind project, as well as a revenue model, such as merchant or contracted?
Yeah, sure.
So yeah, I guess we recognise that this project has a very highly attractive profile, and therefore and good exposure to good pricing periods. That helps us to negotiate an attractive offtake price, but also feeds into our considerations as to whether we want to take some merchant exposure, which will obviously help the economics for us at the time of final investment decision. We also recognise that it's a capital intensive project in a sort of remote part of Australia. So we certainly want to ensure we have the appropriate level of gearing to ensure that the equity requirement for us and J-Power and whether we bring a partner in at financial close or not is manageable. So balancing all of that, we think we're going to end up with a model which is largely contracted, sort of more than 50%, but not 100%. We want to retain some merchant exposure for two reasons, really: to help us manage some of our commitments under the offtake, where we've given minimum levels of LGCs, for example, but also to give some pricing upside exposure for us in terms of that exposure to evening peaks. And it goes alongside our broader portfolio view that we have a highly contracted portfolio, but we do take merchant exposure where we think there is upside to be gained for our shareholders, and it's an appropriate risk-weighted decision.
Thanks, Craig. Our next question is, what are the major construction risks remaining on the hydro project?
Yeah, so obviously as I mentioned, we're sort of halfway through the construction effort. It is all being constructed under a fixed price lump sum turnkey EPC contract by John Hall and McConnell Dowell. So clearly there are risks which are within the EPC contractors, most of them within the EPC contractors' remit for installing, commissioning, and connecting the the underground equipment, for example. I guess clearly the water intake, or the water ingress issue last year was one of those exclusions in the EPC contract, where the risk resides with the owner, with Genex. And so clearly our focus is on the underground works, therefore. So completing the underground works, the main access tunnel, completing the excavation of the powerhouse and the 4 vertical shafts, as well as the tail race shafts into the lower reservoir. All those works are due to be completed this year. And certainly we feel that once that's over, then the bulk of the those excluded risks, I guess, which Genex may be exposed to, will be at an end. So, but having said that, clearly that was an unforeseen event that occurred, unexpected and very unfortunate. But we've now got a lot more knowledge of what's going on underground from the investigation program that we did at the time, and we have a very high degree of confidence that we will not have further issues of that kind.
Thanks, James. Our next question is Genex still looking to acquire any new projects?
So that we're always on the lookout to expand our development pipeline portfolio. We feel that we've got a very exciting and a very strong and a very large near-term pipeline of projects that we're looking to develop. The Kidston Wind project most immediately, and the Bully Creek 2 gigawatt multi-stage battery and solar project. So that is really exciting. 2 really good project locations for different reasons, and we're very focused on developing those through in stages to completion. But we are certainly open to other opportunities, be they storage, battery, potentially pumped hydro in the future, once we get to completion of the Kidston project, and certainly other wind and solar.
Thank you. Our next question is, how far progressed is the drilling of the MAT, and when will you reach key underground works milestones over the remainder of the year?
So the main access tunnel, the realigned main access tunnel, is progressing well, and that's due to be completed. It's not actually the critical path activity currently, but it is, according to our current program, due to be completed in August. And as I say, the rest of the powerhouse cavern, the other underground works, are all due to be completed by the end of this year.
Thanks, James. We have 2 questions from Howard Patrick. Are alternate technologies and companies other than Tesla being investigated? CATL and BYD come to mind. And his second question is, are there negotiations being undertaken with respect to the second stage of Kidston Solar? At what stage are they at? Thank you.
So in terms of other battery technologies, we certainly are in the market. We're not, as I mentioned before, we're not exclusively tied to Tesla. They're not tied to us. We're not tied to them, although we have a very good relationship with Tesla. But we also, for Bouldercombe, we went out to the market and talked to a number of key suppliers and received bids from a number of suppliers, and selected Tesla following a commercial tendering process, and we will be doing the same. We're in the process of embarking on the same for our next battery round. So yes, we're always on the lookout for good commercial offerings and for technologies which will lead us into the future. So we're absolutely not tied to one. In terms of Kidston Solar expansion, currently our focus is very much on the Bully Creek for our next solar stage. Up at Kidston, we are focused on the wind project, which will be using the bulk of the remaining capacity of that new transmission line that PowerLink is building for us. So in terms of our next solar venture, that will be at Bully Creek. That's our priority.
Great, thank you. I'll just hand back to you now, James, for closing remarks.
Well, good. Well, thank you very much indeed for your attention and for some very good, interesting questions. Always very much appreciate this opportunity to engage with our investors and appreciate your support as always. So look forward to staying in touch throughout the rest of the year, and have a good day.
Thank you, James. That concludes our webinar for today. Thank you for participating, and you may now disconnect.